and all other fiat currencies are devaluing. And they're devaluing for a reason. They're devaluing or for several reasons, because these fiat currencies have been overprinted. They're going to have to be overprinted to oblivion just to repay debt and pay the debt service. People are also looking at something they didn't look at before in sovereign debt, and that's risk of implosion or risk of not being paid back. So the metals themselves are telling you something, and don't think of it as gold or silver going up, because they do nothing. They simply are. They simply are money. Real money.
So, Bill, the IMF, which is part of the globalist syndicate, you and I have discussed this fact before, that players within the globalist syndicate, they see all of us plebes as being, 99.9% of the rest of the world, as being in the shower, and they're going to flush the toilet, and they always tend to give us a heads up. Well, this came out this week from the IMF. Quote, this is the IMF, International Monetary Fund, globalist syndicate entity. Quote, gold has outlasted empires, crises, and currency regimes. In an era of digital assets, its staying power reflects not just geology, but psychology, end quote. Bill, that's a huge heads Bill, that's a huge heads up. Am I reading this wrong?
Well, the IMF has issued since 2018, they've issued 24 or more warnings. And you got to understand that the elite feel that it is bad form if they don't warn you. So they warn you, and people ignore it anyway, and they can look back and they can say, well, we warned you.
So, Bill, warning. Let's go back to Thanksgiving weekend, right?
Yep.
Thanksgiving night, there were some significant developments in the precious metals world. And all of a sudden, for about 10 hours, one of the syndicate's exchanges, the COMEX, went dark because of a, quote, cooling issue at one of their facilities, in particular in Aurora, Illinois. So we have the benefit at Operation Freedom of having a crack IT team that have many dozens of years' experience in the world. And they initially and repetitively got back in touch with me and said, Dave, this is bogus. There's not a cooling issue there. We can tell you because we went to the cooling company's website where they have monitors all over the world, and no, it's not. That's BS. This is an absolute con. There is something. These markets are melting down. So, Bill, give us your take of Thanksgiving weekend, the significance of that. Some people say, "Oh, it wasn't really that significant." Your take and where you see things going, because Bill, you've always told us the system will melt down when there's a failure to deliver or impending failure to deliver. Bill, my contention in looking at this and listening to the experts I know in the IT world, it wasn't a cooling issue. It was a impending failure to deliver issue that made that exchange go dark. Am I off?
You're absolutely right. They pulled the plug. They pulled the plug to stop trading so that they could try to get some semblance of normalcy. And they obviously understood it. You got to understand, it's the end of the month when that happened, and that's basically the final delivery day or delivery days for the month of November, and then lining up for December. And it looks like December is going to be another barn burner as far as investors standing for delivery. And mathematically, that's how this ends. It ends in a failure to deliver because the metal doesn't exist for the amount of contracts outstanding and standing for delivery.
So, Bill, you've taken a lot of heat for saying that for years, that this is the end game. And people said it could never happen. It could never happen in London. It could never happen in COMEX. It could, no. In fact, Bill, it did happen. And in fact, I believe the Fed injected, what was it, $35 billion that morning before they could open the exchange, right? It's a heck of a margin call that they were helping somebody get bailed out on. But Bill, right, that's not the end game, is it? I mean, that was the appetizer. This was just it was like a little tiny Band-Aid. It wasn't even a tourniquet put on this problem. Am I reading this wrong?
Yeah, it was a tremor before the big earthquake.
So let's talk the big earthquake.
Okay, mathematically, a failure to deliver has to happen. And the reason being, if they're printing fiat currencies at a rate of anywhere between 7 and 10% per year around the world, that's what you're looking at as far as money supplies and debt increase, versus pulling out another 1 to 2% versus supply of gold and silver. That's how much the mining each year increases the amount outstanding. If you're creating more and more money, yet mining operations are not keeping up with that growth rate, mathematically there has to be a failure to deliver. I can't tell you when, but mathematically it has to occur.
So, Bill, the night all this was going on, Thanksgiving night into the Black Friday, the day after Thanksgiving, it came out that J.P. Morgan, who's kind of been the hub of a lot of hooey that's occurred in the, let's just call hooey, in the precious metals market over the years. In fact, 2 of their traders are sitting in jail as we speak for criminally manipulating the precious metals market. Those 2 were scapegoated, obviously. It went all the way up and down the whole organization. But Bill, that night, Thanksgiving night, it came out that J.P. Morgan Chase moved a portion, if not a big chunk, of their precious metals trading desk to Singapore, the Far East. So, Bill, why would they do that?
That I don't know if it's been confirmed or not. But the reality is J.P. Morgan withdrew, I believe the number, off the top of my head, I think I remember 47 million ounces. Mm-hmm. They withheld that from being available float. So that's what tightened things up, was J.P. Morgan withdrawing the availability of silver that they had on hand.
And Bill, there has been this rumor that there is a large entity, a sovereign, an entity that is standing for delivery come the end of December. And this is why we're seeing the gold and silver markets going up significantly. Do you believe that's the case?
Yeah, I do, and the market believes it too. I mean, it's like throwing chum in shark-infested waters. And there's blood in the water now.
Mm-hmm. So, Bill, play out the next couple weeks going into 2026 and early 2026, because if they papered over their problem at the end of November, and let's say London was leased some metal, maybe that lease was for a month. Maybe it was for 2 months. Maybe it was for 3 months. But somewhere along the line, if they got bailed out just to stay afloat for a little bit, they got to find a way to get the metal that I don't see how they can get their hands on to continue functioning. Am I reading the future off?
Well, yeah, they can't deliver paper, and you can't print silver, you can't print gold. Because it's year end, understand that December 31st, financial institutions want to try to flatten their books for year end. Mm-hmm. They do it each quarter, but especially year end, they want their books to look as good as possible. That's going to be a problem this year because if you're short silver or if you're short gold, how do you unwind that short between now, in the next, 6 or 7 trading days left in the year? So yeah, there's going to be a lot of excitement, I think, over the next week and a half, and we'll just see what happens going into January. I mean, if they fail to deliver, you may have a very ugly first week of January, culminating in markets closing.
So, Bill, many people are saying, or have gotten in touch with me and said, gold and silver have had a huge run this year, right? But they're in a quote bubble phase, end quote. And Bill, to them I say, no. What you're lacking the understanding of is that gold and silver are not overbought. They have just been oversold criminally for 50 years. Am I off?
Right. No, exactly. And this is important that people understand. A lot of the leverage, and of course the Japanese carry trade is where a lot of the leverage came from, which is unwinding because the yen has strengthened and interest rates are going up, so it's making the carry that much harder. But the carry trade, that leveraged capital, has been used for years and years and years to plow into the stock market, to plow into bond markets, and to sit on top of gold and silver to keep the price from rising. Mm-hmm. Now that rig is obviously breaking, and once credit becomes difficult to obtain or actually freezes, what happens? You're going to see stocks and bonds collapse, and you will see 50 years of gold and silver suppression unwind to the upside. Because if the credit is not forthcoming, you've got to sell your position. So you sell your stocks, you sell your bonds, but they have to buy gold and silver because they've already sold them first. So to close that trade, they have to buy gold, they have to buy silver. I would just tell them that what's coming is, or where we are right now is you're watching the reset in real time with your very own eyes. Mm-hmm. It's not a reset that's going to happen next year. It's happening in real time.
Mm-hmm. Mm-hmm. And many people say, well, the stock market appears to be overvalued. So when the stock market sells off, gold and silver will also sell off. And I believe, Bill, you just made the point of why that's not the case, correct?
No, exactly. Yeah, because when the leverage unwinds, it unwinds to the downside for stocks and bonds and unwinds to the upside for gold and silver to make up for all the years of suppression via naked paper contracts.
Folks, we're speaking with Bill Holter, BillHolter.com. So, Bill, as the system continues to unwind and these precious metals markets, these exchanges continue to have difficulties and precious metals prices continue to increase in value, what are we going to be seeing? Are we going to be seeing more, quote, cooling issues at exchanges? Are we going to see the closing of the London LBMA? Are we going to see the closing of COMEX where they go, sorry, this whole thing is like deep underwater, so we're going to cash settle those on the long side, and the shorts, well, we're just going to kind of just clean that out and bail you out. Is that what we're going to see? What are we going to see, do you believe?
Well, ultimately, you are going to see markets close because the margin, the debt, will unwind. Mm-hmm. And when it unwinds, they will be forced to close not just this market or that market. You will see a period of time where basically all markets around the world closed or are at least severely hobbled.
Bill, a financial analyst has recently stated the following: China, Russia, and the rest of the BRICS countries, Brazil, Russia, India, China, South Africa, and 140 other countries, are positioning themselves for the final economic battle with the American London Empire. They've been rapidly selling U.S. treasuries, these BRICS countries and China and Russia, and replacing them with gold and now silver. Do you believe that's a fair assessment?
Oh, I think it's 100% correct.
And then we have Eric Young, who's based out of China, financial analyst. He states, quote, silver is the most artificially suppressed and undervalued out of all commodities. Russia and India taking the lead on silver is a signal to the global South commodity producers that they will no longer sell their lifeblood at artificially low prices. Your take?
I think that's correct. Silver, even after doubling this year, silver is still the cheapest asset on the planet because it's been attacked, ever since the Hunt brothers. It's been attacked year in and year out, and the price has been artificially below fair market value. And what did that do to mining companies? It hobbled them financially so that they couldn't not mine what they normally would have because it was not profitable to mine. So that created a supply shortage.
So, Bill, here comes the Nostradamus part. We're going to call this Nostra Holterus part. When Dave and Bill are having a discussion in April of 2026, what are we going to be talking about?
Oh, maybe we won't be talking.
Well, that's cheery. Merry Christmas.
No, I'm serious, Dave. Nobody knows when this is going to happen, but when it does unwind, it's going to be a 72-hour event. And this is not going to be any type of soft landing or anything like that. If they fail to deliver in silver, then all markets will implode, because what that does, it tells you that the contracts were worthless. The contracts cannot perform.
And all financial institutions are connected to all other financial institutions around the world, and this would be a daisy chain type of reaction through the derivatives situations that they've held, correct?
Exactly. Yes, exactly.
So, Bill, what do people need to do in our final 2 minutes together today? What do they need to do for the coming new year? Well,
you need to prepare to be on your own for a spell. I don't know how long that's going to be, but you need to be able to have clean water. You need a power source. I mean, who says that the water company or the power company is going to still be running if banks are closed and there's no credit forthcoming? So you need to prepare food, water. You need to be able to protect yourself. If you live in a city, good luck. It's not going to be. It's not survivable in a high density population. And you need to have gold and silver, because if you do not have gold and silver in the new coming system that the world is telling us is going to have gold/silver backed, not convertible, but backed currencies, if you don't have that, your financial life is over.